Good evening. It is Sunday, the 29th of August. I'm going to start the weekend video today with a quick review of what's been going on in major indexes. It was an important week. We had a shakeout and follow-through move with a strong close on Friday in multiple indexes. So I'll start off, as always, with the Nasdaq Composite. You can see we broke out to new highs at the end of the week on 1.23% move. We're above our rising 50-day moving average, and we cleared the top of this near-term range that we've been in. So it's been making a sort of uptrending range within there. So we've got it's a micro sort of Wyckoff range. You can see the classic buying climax, automatic reaction, secondary test, and then a local spring at the 50-day moving average, and then we followed through to the upside. Got a little sign of strength rally coming out of this sort of micro range here, following our broader range that we're in a bit further back there. The Russell 2000 had a really strong close on Friday. We had a sign of strength bar on Friday on really good volume, bigger than the last week or so's volume. You can see we've had a good strong week with only a down day on Thursday as it has turned down below the 50-day moving average. It couldn't get through there on Wednesday or Thursday, but then strongly moved back through on Friday as people started to pile back in again. See, we're still within this broader stage 3 range, but with a local spring down here in July, and then a further local spring at the 200-day moving average, and then back into this range, back through the demand line again, and the 50-day moving average, and back above its 21-day EMA. We're starting to move back towards the top of the range again. So although the Russell has been the weakest of the indexes, it's starting to show some sort of turnaround. If I go to the major indexes, you can see this in the actual relative strength table here. You can see it was at the bottom of the table a few weeks back, and you see it started to move off the bottom. It's now back up to a CTR score of 46, so sort of getting back into the middle range. The range goes from 0 to 100, so getting back into the middle range. It was up a 5.05% close this week for the Russell. You can see other indexes. We got Nasdaq moved back above the S&P 500 in terms of relative strength. So the S&P 500 is what we call the zero line. So everything is based against what the S&P 500 is doing. So you want to be in areas that are outperforming the S&P 500 in general. So at the moment, that's financials, real estate, technology, Nasdaq 100, and communication services. Everything else is still underperforming, but as I said, we started to see some strength come back in some of the weaker areas this week as well. So with energy had the strongest of the week with 7.45% with a spring type action in there. If I quickly zoom in on that, you can see we had a little bit of spring type action in here on the weekly chart there as it undercut the 200-day moving average and came back through and has got back above its 21-day EMA at the end of the week. So we had a little inverse head and shoulders pattern going on there, and it's starting to show sort of some spring type action in here with a bit of follow through on Friday. So that one's looking positive too. The Russell 2000 Growth Index, again, another sign of strength bar on Friday, after a really strong week where we were gapping up a few days off the spring type low in there, back through the 200-day moving average. And on Friday, we got back through the 50-day moving average as well and closed strongly above it by about 1% or so, I think. So 1.5% above the 50-day moving average there as well. Haven't cleared any near-term resistance, and we're still within the range at the moment, but it's got back above this declining sort of trend line here where we've had a sort of short-term channel forming. So starting to move back above its 1 ATR level, attempting to get back up towards the 2 ATR level. So starting to see a bit of short-term trend change in that one as well. The QQQJ, which is the CanSlim type stocks, so similar to the 50, but a lot more liquid. This covers the second 100 stocks in the Nasdaq, so it's like mostly large to mid cap type stocks, mostly more mid caps. So your Rokus, etc. So this one has been since the May low, back down there on May the what was it, May the 13th, has had a strong move up, and you can see we had a change of behaviour over the previous, what we were getting on the left-hand side of the chart here. We were having much stronger reactions to the downside there, but you can see the reaction started to tail off and got much shorter. And then we did have a stronger pullback again, but you can see it's tightened up a lot more again. We've had this strong move over the last week. We thrusted up through this local spring and came off, had a good 6% move over the course of just over a week. And again, similar sort of sign of strength type bar, strong day with a big spread on the day. Volume wasn't great on that one, but we're near to the top of the range on this one. Actually cleared a near-term pivot. So and we cleared the 2 ATR level there. So the 2 ATR level was at, what's that, 34.74. So we closed at 34.74. So we actually closed on the 2 ATR level. So we're into an uptrend on the short term there on that one too. Again, back into our major indexes and S&P sectors. This is our relative strength table. So I was just going through. So again, with technology and the Nasdaq and communication services are starting to show up in the upper half above the S&P 500. So starting to outperform again, which is good to see. If you look at the candle glance chart of all of the weekly charts of these, you can see we had a few stage 2 continuation breakouts this week. So the QQQ, you can see, made a stage 2 continuation breakout to new highs. The XLC, which is communication services, made a stage 2 continuation breakout there. XLF is just on the borderline. We've got a little cup and handle pattern in there. So really good to see that strong, as it's the biggest of all the sectors. It's got the most stocks in it. And technology made a stage 2 continuation breakout to new highs as well. And you can see utilities, healthcare, and staples. So the more defensive stocks sectors actually sold off on the week. So we got some good strong moves in the risk on areas of the market. We look at individual groups. So this is the RS table. So this uses the Dow Jones US industry groups, where there's 104 industry groups, and you can track these. I track these on stockcharts.com, but I'm sure you can track them in other software programs as well. But I find it really easy to track in stock charts. So I update this each week, this RS score, based on the stock charts SCTR score, which is what they use using it's a proprietary thing that they've got, which they tell you how to make it on the site. It uses 6 different measures based on the long, medium, and short term, but it's a really good way to track the RS. And you can see we've got brewers is our weakest sector with only an RS score of 1, and renewable energy like the solars, etc., is the second weakest, and has been the weakest for most of the year, since year to date, whereas coal has been our strongest sector since about March time, sector group, and has been holding up. You can see 12-week change is 0. So 3 months ago it was the number 1 sector, and it's still the number 1 sector. So you've got stocks like BTU and Arch Coal, and that have been continuing to make new highs here. You can see this run that this has been having. This is the weekly chart since sort of April time down here. So we made a stage 2 breakout back down here, and we're up. It's up 189% since the stage 2 breakout, and since the year to date, January, where to go, open at 2.46. So it's up over 500% year to date. So you can see that's just one of the stocks in the group, and that's the leading stock in the group. But you can see why coal is the leading group at the moment, and continues to make new highs, although it keeps having sharp sell-offs within intraday and on the weeklies, but it keeps continuing to chug higher, as does the likes of aluminium and steel, which have been performing well over the last 12 weeks as well. As you can see, for the last 3 months, they've also been in the top 3. So these have been the top 3 groups: coal, aluminium, and steel, for the last 3 months now. So energy and materials have been leading, and energy was our leader earlier in the year. But a little bit of change going on at the moment, as I talked about on the other part of the video. So if we change this to a 1 week change here, you can see semiconductors starting to move up the rankings. So on the 1 week, and if I change to a 2 week here, you can see semiconductors is number 1 for 1 and 2 weeks at the moment. So we've had some strong moves in multiple semiconductor stocks over the last few weeks. So if we look at the group chart itself, you can see it thrusted up off of this pullback to the 50-day moving average and made a new high this week. The likes of AMD and Nvidia are continuing to perform really well, and now the secondary stocks in the group are starting to move up higher as well. And another group that's doing really well is Internet. You can see it's up into the top 20 again now. So if I put it back on, I think it's higher than that. So we go to the major overall score here. See, Internet is up to 8th place at the moment. So if we look at that group there, you can see again making new highs. Really strong week, hardly giving back anything. So this has the likes of Google and Facebook, I believe. Maybe let me have a quick look in the group. So if we look in the group here, 1 week. So you've even got your NFT stocks like TCAT starting to show up in there. But if we go by column, I don't think it's going to show me by caps, is it? Yeah, by cap, large cap. You see down here our large cap stocks. So you've got Google, you've got Pins, you've got Baidu, you've got Netflix, you've got Dash, Twitter, Snap. So it's been a really strong group over the week. You can see TCAT is, like I said, that's one of those, the NFT names starting to pop again, but obviously not one that I would personally be interested in. But in terms of the groups, so we can see we've got some growth groups back up near the higher end. So you've got Internet in 8th place there. Was that 6th place? As I said 8th, it's 6th. And then you've got software, which is in 9th now, and then semiconductors up to 22nd. So they're sort of the major growth groups in that sort of area out of the tech space, and even electronic equipment, which is the slower moving tech sort of stocks, moving up into there as well. But you can see some financial groups quite high up in there as well. Like we said, there's plenty of stage 2 continuation breakouts going on in the financials. So if you're a bit more sensibly minded, then you want more slowing moving stocks but that continue to grind higher, then obviously look into the financial names, as they're still having very strong stage 2 advances. So if we move on from this, so let's move on to a little bit of market breadth next. So as I usually show, this is my custom chart that I do of the NYSE and Nasdaq percentage of stocks above their 50-day, 150-day and 200-day moving averages combined chart. So this chart basically is the combined chart of these three here in the Nasdaq and these three here in the NYSE. So the top one is the 200-day, middle one is the 150-day, and the bottom one is the 50-day. So I add all 6 of these up together, and we then create this chart, so which gives an overview of short, medium, and long term in a single chart. So I find this really useful for market timing. So as I've talked about before, back here in obviously early 2020 sort of time, when we had the March low, started to get back through the 20-day moving average there. We started in the start of April here, so similar, went through that same time as the follow through day in the market, then back through the 50-day moving average in near the end of April there. So it stayed above that for the majority of the year, only moving below it in what time we got there? September time and October, sort of early November time. So only moving back below, but for the majority of the year, that was on a positive, what I consider a positive environment. So anything above the 50-day moving average is a positive environment, and anything below it is a negative environment or a difficult trading environment. So doesn't mean necessarily bearish, but it does mean difficult. So as we saw in the indexes, so the Russell, when it moved on to a difficult environment back in February time, we've gone sideways since then. So I think it's really useful in that using it in that way, because people talk about the weakening breadth and things like that, but the charts have, like we said, have generally gone sideways. They haven't necessarily sold off. There's obviously been some huge sell-offs in individual names, but it doesn't, just because the breadth is declining doesn't mean that you're not going to make new highs in certain indexes. The large caps have outperformed during this period and have gone on to make new highs, whereas the small caps have gone sideways, and individual stocks in some of those have obviously actually been destroyed in certain cases. So there was a short period here back in the May-June time when we got back above the 50-day moving average, and we moved back into a positive environment, but then we rolled back over again, and we've been in a negative environment ever since. But as you can see, on Friday, we finally moved back above that 50-day moving average again of this chart. So really, really important in my eyes. This is a tentative bull signal. So I went back to, in my position trading account, I got back to fully invested on Friday with the sign of strength bars in multiple indexes and with this breaking above the 50-day moving average. So this moves back to what I say is a positive environment. So it's very tentative if it's only just got back above it. So if we look at this chart in a different way, so if you see this red line here, so that's the 50-day moving average. So on this following chart, that 50-day moving average is this 0% level. So the 50-day moving average is 0%. So this chart tracks is the same chart as this, but flattened based on the relative performance to the 50-day moving average. So as you can see, we just broke back above that. So you can see since this time down here, so since February time, we've generally spent the vast majority of the time below the 50-day moving average and what the zero line on this chart, except for that small peak above it back in May, June time. So we've started to peak above it again on Friday. So a very tentative bull signal. But as you can see, through last year, from April on till, except for that peak down there, all the way through to January. So from April through to January, we spent the majority of time above the 50-day moving average. So that's what we want to see now. That is a positive trading environment, and that's when swing trading works. Basically, when we're in a negative trading environment or a difficult environment, swing trades are incredibly hard, and you'll get chopped up and stopped out continuously, and especially breakout trades. So you have to take much smaller gains. And basically, I think one of the ways that I would consider using this kind of information is that when you're in a difficult trading environment, that you have to have much tighter stop losses, and you have to take smaller gains in order to make any kind of progress, because the kind of moves that you get in a positive environment where you can get 20 to 30% plus moves and just let them run for a while, in this kind of environment, when you're in a difficult environment, like a lot of the time you can't even make more than a 10% move before it turns around and goes back again. So it's you have to be much quicker, or basically not trade at all during this kind of period. But now we're moving back above the 50-day moving average again. If that can continue and we can make a strong move above it, I obviously don't get many periods where you go above strongly like that. So 2019, in January time 2019, we had that really strong thrust at the start of the year, and that went all the way through to April time there, you can see. So and that was a really good time in the market back then as well. And then we had sort of a choppy year through 2019 where you had periods of strong strength and periods of weakness. So that's what I consider a more normal trading environment. Whereas last year was obviously crazy with the huge swings up and down. Whereas this year we've spent the vast majority of the time in a difficult trading environment. So going into year end now, if this can move up and start to hold in the upper range here, then we could be in a positive trading environment again, and swing trades could start to work once more, which would make it a whole lot easier to make good gains in an account. So this is the percentage of stocks above their 20-day EMA in the Nasdaq. As you can see, I talked about when you get into the lower zone, that the signal is when you get in the lower zone and you start moving back out through the key 30% level again. So we had that a few weeks back, or last week. What was the date on that? On the 20th, we moved back through there. So we moved back through just over a week ago, and then we've moved on to higher highs again. So we met above these near-term range that we were in earlier in the month. So 65% of stocks are above their 20-day EMA again with the close on Friday. And you can see that the key with this one, so how I use this chart is not just obviously where it is on the chart and how it's moving up. I use the relative performance versus the S&P 500 as well. So when this breaks through the zero line on here, the same as we use the Mansfield zero line, exactly the same as we use on the charts, then again you're in a positive environment. So you can see sort of December, January time, it was above that level in here, and then a little bit part of February as well. But then for the majority of the rest of the year, we have been below that level. So this is another way that I use this information. So not just the position on the chart and what the percentage of stocks above their various EMAs are doing, but like the relative performance versus the S&P 500 and whether that's above the zero line. So with that moving above the zero line on Friday, again, potentially we've got another buy signal in for this short-term EMA version of this. If we look at the small caps, the S&P 500, similar sort of picture, moving to the upper range there. The Nasdaq 100 version of it, the NYSE, doing the same thing. Nasdaq 100 doing the same thing. So looking promising there. So this is the broken down chart. So this is the Nasdaq percent of stocks above their 200-day, 150 and 50-day. So you can see short term we're starting to move up, and we've rebounded off of a lower level in the medium term, and we got out of the below 40% on the 200-day as well. And similar on the NYSE, the short term started to move back up. We're back above 60% again, and above 60% on all of those. So as I said, on the combined chart, you can see we've moved through that 50-day moving average on there, and 54.01% of stocks are back above their key moving averages again. So you want to start to see that move back through the 60% level, and that would signal stage 2 environment once more. And what else we got? So obviously, signals on these short-term charts are generated from the point of figure charts. So this is the NYSE percent of stocks above the 50-day moving average. You can see we had another double top breakout here. So this is on a bull confirmed. We had a double top breakout in the middle of the week here through here too. So this also is now on bull confirmed on the Nasdaq percentage of stocks above their 50-day moving average. So both short terms are back on bull confirmed, whereas the sort of medium term is on a bull alert, and then the long term on that is on a bear correction. So you can see how we go through the stages of it, of that we get bull, you can get to bull alert, bull confirmed, and then basically you start to move out in through the time frame. So short term obviously is going to move first, and then medium term, and then long term. So you can start to put on some test buys, is how I kind of approach it when you get the short term bull confirms and the medium and long term are still only showing bull alert or bear corrections. And then over time, if the bull if it gets follow through, then they will also move back to bull confirmed status once more again, and then we generally will be in an uptrending environment again. NYSE Advanced Decline issues, we got back above the 50-day moving average on this as well. So it's still in a range and still kind of in a neutral environment. If we look at the Advanced Decline volume, the Advanced Decline, this is the Advanced Decline volume. You can see this peak back through. There was a strong move on Friday. The Nasdaq's had some spring type action on its Advanced Decline line. Then the Advanced Decline volume continuing to make new highs. It hasn't given anything other than the bull signal since the April breakout back here. So if I change that to 6 months, you might be able to see that. So it moved through in April in 2020. We've been on a bull signal ever since on the Advanced Decline volume line. So that's calculated by the Advanced Decline volume. Oh fuck! I'm talking absolute nonsense here. So it's the cumulative Advanced Decline volume line. So it's the net result of the advances minus the declines of the Advanced Decline volume. So if you can see, this is the momentum index short term getting back up back to zero line. Nasdaq through its zero line. McLennan oscillator doing similar. And then the Nasdaq McLennan oscillator is much stronger. We're getting back in the upper zone, and we've got the summation index also moved for its short-term moving average there, starting to turn up again. So, and the EMA is close to crossing over on the NYA version, and the Nasdaq version is still on a bearish signal there. So for the most part, we're seeing a lot of improvement in the Advanced Decline lines. The new high, new lows, we moved back to positive. We did have that short move down, got down to about minus 1,000 there, but you can see we've had similar to sort of other short-term correction sort of peaks that you've had on the lower side. Obviously, our big bearish moves you can see are huge and outweigh those dramatically. But in a standard pullback, it generally doesn't get much past the -1,000 level there. If we look at the individuals, so this is the Nasdaq 52-week highs and 52-week lows. So the red is the new lows and the grey is the new highs. So 206 new highs on Friday and 55 new lows. So you can see we had that bearish sort of thrust up there, which we haven't had for a while, and it's starting to recover back to the bullish side there on the Nasdaq. And then the NYSE, we see it never really got very bearish. We only had a small peak up, but we're back to 165 new highs and only 32 new lows on Friday there. So it's starting to look more promising. The cumulative point of figure breakdowns and breakouts is moved back above its 20-day EMA on Friday, not EMA, moving average on Friday. So it's in a sort of neutral zone. I use this one in a similar way to what I use the percentage of stocks. So above its 20-day moving average and 50-day moving average is a positive environment, and below is a negative or difficult environment. So we're just moved back above the 20-day, so positive in the short term, but we're not above the 50-day yet. So negative in the medium term. So that gives the combined of that is a neutral at the moment. And you can see something else I wanted to talk about. Actually, this was something interesting that I saw on the Dorsey Wright site over the weekend. So I was reading through some of their articles, and they highlighted that Apple has been on a relative strength buy signal versus the S&P 500 since 2004, and has outperformed the S&P 500 by 29,550% over that time. So you can see on the point and figure chart here, that was your RS buy signal back in 2004. So with an RS chart for the stock versus the market, you use the S&P 500 equal weighted index and use a 6.5% box size. And I use close only charts, so you don't use high lows on those. You use a close only chart on that, so you can see when it's on, it has a double top breakout, then it's on an RS buy signal, and when it makes a double bottom breakdown, it'll be on an RS sell signal. So, and if it's in a column of O's, then it's obviously negative, but on a buy signal, it's on a correction. So at the moment, it's in an Apple, for example, is in a correction within, but it's on an RS buy signal. So, but in a correction state at the moment, but it's been on an RS buy signal for the last 15 years. So my question that I put out yesterday was basically, what do we think could dramatically outperform for the next 15 years? Because obviously 19 other stocks have done better than Apple over that period, and have also, might not have done better, but they've also been on an RS buy signal for that period. So what do we think is going to outperform the S&P 500 for the next 15 years, and something that you could hold in your pension account without having to sell it for that entire time, and make those kind of dramatic gains where you make thousands of % on a stock without having to sell it, and without having to do anything with all the kind of intraday buying and choppy buys that we have, where we're in and out of stocks every few days or every few weeks. It's like the pension account is very different kind of environment, and you only want to be buying and selling stocks very infrequently. So ideally holding some core positions for years. So this obviously shows you, if the RS buy signals can give you one way to hold a stock for years. I use it on stocks that I look at. You do get some where you'll get shaken out occasionally, but if a stock obviously has is still on an RS buy signal, and it's obviously starting to weaken against the market, this is the kind of thing that can give you conviction in a long term holding, that you can continue to hold it, and then just wait and not have to do anything. So again, my question is, what do we think is going to outperform for the next 15 years? So, and dramatically outperform the S&P 500 that you could hold in your pension account for that long. We've got quite a few suggestions on Twitter, etc. I think Tesla was the one I put out there, because I think it needs to be something that's going to be a global stock that's not just a one-trick pony. It's not a stock like Peloton, which has only got a very limited kind of product range and is not going to take over the world. More of a stock like Tesla that's got obviously huge R&D and obviously trying to do hugely different things and might change its company dramatically. It might not end up being a car company at all. It might be something completely different in 15 years time. Pretty much like Apple in 2004 was the reason it was starting to move out was because it was starting to, I think they had the iPod started to get big traction, and then 2007 then it had the iPhone change the world, for example, and now everybody's got Apple products of some kind in their household. Probably not everybody, but a vast majority of people have Apple products in some shape or form in their lives. So it's those kind of stocks that you're looking for. So for me at the moment, one that comes to mind is Tesla. I can't think of too many others. People suggested Nvidia, but again, it's a bit of a one-trick pony. It's very limited in what it does. So I think it could outperform for a long time, and it is on an RS buy signal and has been for 5 or 6 years now. So it is one that could continue to do that, as has AMD and other stocks like that. And then I think like Shop and SE. There's various that you could think of, but for me, I think it needs to be like some monster stocks that are going to take over the world. So and be a true global leader. So something to mull over. Right, next up, let's talk about. Each weekend I run the stage 2. I run a volume scan, basically looking for stocks that have had more than 2 times their average weekly volume, and look for stocks that are potentially moving into early stage 2. But obviously I get, during the week when I do my watchlist scans, I pick up various stocks that might be moving into stage 2 ahead of these kind of weekend scans. So we generally tend to pick up most stage 2 breakouts, but the weekend scans pick up any that haven't obviously already highlighted. But a few this week. We've got ANIX had a really strong volume breakout this week through out of this range here. So not necessarily a stage 2 breakout, but it's coming out of it was already in a sort of choppy stage 2 advance and pulling back, so it's potentially in stage 3, so it might be making a stage 2 continuation breakout, let's say, from that one. You got ASX, another semiconductor name here, again another stage 2 continuation type breakout here. You can see it had really strong volume on the week. It did break out about 4 weeks ago there and started to move back out again. You got Bill, we had earnings this week. I did say on Friday's one, with it moving up and being over 100% move since its May low, it's way past the upper end of its range, and you can see on previous earnings moves when it's done that, it's tended to top out at that point. So we could potentially be at the upper end. It's way out of its ATR channels and really extended from any kind of moving average. So it could continue to run straight through, but it's a stage 2 continuation breakout to new highs. So for me, I think it's the fact that it's so extended that it's more than likely to start to consolidate and start to pull back a little bit, like we've seen on previous big volume moves out. So I'll be keeping an eye on that one, as it's got really good target from this base. I think it projects up another 100% or so. So it's one to keep an eye on. Crowd probably might have been stock of the week in terms of how it looks moving out. I really like DocQ as well. I did buy that on Friday. I think it's one that I highlighted a while back on the Wyckoff Spring, and I did trade the initial move out on that one and cut short on took an early profit, and so I got back in on that one on Friday. But as it's starting to make a handle within and pull back to its 10-week moving average, but we'll look at that one in a minute. But CrowdStrike is in the institutional advance phase. It's pulled out of this cup without handle base here, and then made a higher handle, and then pulled back into its 30-week moving average and rebounded back through the 10-week moving average on earnings this week with strong relative volume. It had a really good gap and run for a couple of days. I think short term it might be potentially a little extended. So yeah, it ran through the week. See at the end of the week there, it's a little bit of a supply tail at the top there. So if we get the ATR bars on this, it's still only just getting up to the free ATR level up there. You can see it's the volume starting to tail off a little bit. So it might need to consolidate and pull back in to the top of the range here. So 270, 275 sort of area. It might, and the one ATR is at 266 at the moment. So it could need to chop around sideways for a little bit to work off this gap and go type move that it's had here. GSM is another one. It had a strong move through the week, so it's been making a base for the last couple of months and moved strongly higher there. See on the daily, we had 2 really strong days at the end of the week. Pan W. So this one we've been watching for ages. I highlighted it within the base down here with the little VCP that was happening earlier, and we had the Wyckoff range back down in this area, and I think I highlighted on this breakout down here. It then pulled back again, and then it gapped and go. It had a gap and go this week, so following earnings, I believe. So it's had 3 days following earnings where it's just moved higher. So again, this one might need to consolidate a little bit and start to pull back in here, but you wouldn't want to see it start to come back below this range. You've got that heavy volume move in there, so you wouldn't want to see it come much further back below there. So what's that, 9%? So anywhere within this current range in here, it could be could form a potential entry point again. So ANX, so I did highlight that one. So what else we get? Oh, this is ANIX. So I did mark this one up so you can see the ANIX again in a more detailed way. You had the Wyckoff range marked up in there. So you had the short-term selling climax and automatic reaction and a secondary test as a sign of weakness there. But then it moved back through, made a higher low, and started to move back out again. So potentially this is your phase C and starting to move out again into phase D. So keeping an eye on that one. It's an interesting one. Had a really strong day. So potentially a sign of strength rally at the moment, but near the top of this near-term range. So if it can start to break through that would be a real sign of strength on that one. Watch list stocks from this week. There was a good list this week after such a strong close on Friday. So I'll just run through these a bit quickly. So it's ordered them by CTR relative strength. So Bill had the strongest relative strength, Alcoa, D-Dog, US Steel, and Bentley Systems. I think we talked about that one earlier in the week on the live show. So that one, it sold off on Thursday, but then had a full fake breakout, but then reversed back again through the 50-day moving average on Friday and back towards the pivot level again. So it shook out some people there, some quick stop outs, and then it's ready to go again. So Box, similar shakeout type move back through the 50-day moving average on Friday. Bill, as we talked about, big earnings gap and followed through with a 30% move on the day. So showed really good strength. There wasn't any sign of weakness in that. So really extended short term, but could, if the market is strong, then it could continue for a little bit before starting to consolidate. So it will depend on how strong the market is, I think. ASX been making a strong range over the last month, little sign of strength / up thrust, pulled back, a little bit of backing up action in there. Looks like attempted to move out again. AOS, they've been making a range in here, so tightening up, a little bit of VCP action going on in there, so potential for a breakout to new highs. ANIX, we already talked about. So AMD, again, took this one on Friday through the pivot point. So looking interesting still. So I've traded this a few times. So I think this one could continue to go. AA, which is Alcoa. So this has been making a sort of raggedy cup and handle / Wyckoff range type pattern. We had a sharp move down, but has quickly rebounded on not too much volume there. So showing it washed out the supply potentially and starting to move higher. Coin, talked about the various crypto stocks recently multiple times. So you've got Coin, you've got Mara, you've got Riot, you've got MSTR, Silver SI, What else? There's HUT, HUT. There's multiple, all in really good positions as Bitcoin and Ethereum, etc., set up in really good positions at the moment. So Coin, obviously the largest of them in terms of cap. So this one could potentially start to get moving out of this lower range that it attempted to pop out of initially, and it's held above its 21-day EMA here on Friday. So this one could go again. DBI starting to get back through its 50-day moving average here, rebounded, a little demand tail and follow through on Friday potentially there. DCT, I think this was my favorite looking chart of the week. See this little uptrend channel it's been forming since it got back through this 50-day moving average. Little sign of strength through the 200-day there, starting to pull back and tighten up, and it's held above this 200-day moving average for the most part for the last few months, and started to break out on Friday. We got some strong relative volume coming in there, so this one's got potential for a breakout move. I think if we look at it on the weekly chart here, you can see this stage 1 base that it's been forming down here. If you ignore the up thrust up here, so it's been forming a stage 1 range since the initial IPO base. So institutional due diligence phase at the moment for it. So if it can break out strongly through here, it would move into stage 2. So Duck Creek, that is. D-Dog also got back in this one on Friday after after I got out earlier in the month. I think I got out earlier back down in this point. So got back in on Friday with the reversal move. So again, looking for this to move higher in here. Still extended short term, but we can see we've got a bit of a flagging type action going on. So potential for it to continue higher. Disney starting to make some constructive action. Rebounded off the 200-day moving average there. So looking for a breakthrough this near-term pivot. DocQ, one of my faves at the moment, got back in on this one on Friday as well. So back through the 300 level here. But if we look at it on the weekly chart, this is where it really starts to shine for me. So if you look at this comparative period back here in 2019, so what was basing the spring action on down here was what was going on in here. So if you look at this little area down here, so July to September time to this period down here, this breakthrough here, I counted this as an analog bar for this one. Exactly the same move. We've continued to have very, very similar price action. So at this point in the chart back here, back in November 2019, is where I would count we're sort of at on the analog of this at the moment. So it continues to act in a very similar way. Volume has dried up over the last few weeks. So for the last 4 or 5 weeks there, as it's pulled back into the 10-week moving average there and held above the highs. So entered at the 300, just under the 300 level there on Friday. So looking for this one to do obviously similar sort of what it did through 2020 there. Obviously we might not get what happened in 2020 again, but it's, as far as the analog goes, it's around this point currently. So you can see there, that's what I'd be aiming for, but we'll see how it goes. But at the moment I'm looking for a continuation breakout higher. So one of my favorites at the moment, ETSY, around the top of this near-term range, so consolidating, so looking for continuation out of that. Facebook breaking the near-term pivot, so again continuation, looking for a continuation to new highs. You can see on the weekly it's near to new all-time highs, so this one could just continue to go as the mega cap strength continues this year. Gato with gold starting to tighten up in stage 1, the gold and silver names starting to turn around again, so back through its 21-day EMA on Friday, still under the 50-day but starting to shape up a little bit. PLTR, see we've got I've marked up the Wyckoff range on this one a while back, so failed at the minor sign of strength back there but started to make a LPS back here, so local spring, so potentially phase C down here, spring in a test and then followed through out on the earnings and has been tightening up around there. So looking for a sign of strength rally, which potentially take it out into the mid 30s before starting to back up again. So that would be through this near-term pivot here. That would be another 20 to 30% move before we started to back up again. Then what else we got? Riot talks about this. So again, crypto stocks. This one could also break out. Mara's already moved. And the hut's already moved on Friday. So SQ again got back in on this one on Friday. I basically got back into lots of growth stocks on Friday with the near the close with the price action that was going on in the market. So rebounded back at the 21-day EMA. So again held this significant bar from the earnings back here. So again, it's held that twice. You can see the reaction has been smaller. So if you were taking this, you could either the rebound at the 21-day EMA is what I took on Friday, but another entry point would be back through the near-term pivot, and that would give you about 5% risk also. But again, this significant bar, the significant bar is still the major stop loss on that. So you would still have around 10% ish risk range on that one if you were using that as your major stop loss, if you're using it for a more position trade, and that would keep you below the 50-day moving average as well. So 5 to 10% stop on that one still if you waited for the pivot point, but I didn't want to wait for the pivot. I'm using some rebounds off the 21-day EMA at the moment a little bit more. So that was where I entered that on Friday. So TPH, lots of home builders looking good at the moment. Lennar, Dorton Homes, Triponti, which is this one, TPH. So potential to move for pivot points here. So which they're more slower movers, but you can see back to the 50-day moving average there, you'd still have a 10% sort of range if you're looking for position trades on those kind of ones. X, which is USX, US Steel. Sort of a raggedy cup and handle, inverse head and shoulders starting to form on that one. This has been one of the strongest groups of the year. So again, this could continue to new highs. And then Zoom Info, talked about this one multiple times, had earnings a couple of weeks ago, and really strong move out, and then it's consolidated since. You can see we're right near the IPO advance high. So potential for this to move out into the IPO advance phase. It's still in what we call the turbulent zone at the moment, so starting to tighten up in there. So still got a little bit of a move above the 50-day moving average there, 12% if you were looking for a position trade sort of stop loss zone on that. You can see the volume on these significant bars here is what I would use for a position trade low, so you'd want to be below those. So if you are taking the pivot through here, that near-term pivot, and then back to there, you've got 13% to get under those, 13 to 14%, whereas just under the near term here, you probably got to the 21-day EMA as well, about 6%. So still a little bit loose on that one, but it's more of a position trade type name. You can see the inverse head and shoulders on this and that big volume breakout. So this current area in here in the turbulent zone at the moment is the range that I'm looking at. So you've got like a short-term buying climax and automatic reaction. So starting to move out here. So keeping an eye on that one too. I think that might be the lot for tonight. Okay, good. Right. Thanks for watching, guys. I appreciate this is a long one. This is a weekend video, but I hope you enjoyed it, and I'll see you tomorrow.